Good morning, traders. This is the Aussie Daily Review, South African Top 40. Now, we ended up the day with an inside bar. So on the daily, we had this exhaustion bar that said the day before yesterday, and then we've now ended up with an inside bar. We also had a bit of a fake out on the closing range strategy, which was kind of what I was expecting, as I said yesterday. And I'm not sure whether we hit the target, but we did hit a breakout level, which is, you can see up at this line and on top of this fractal bar here. But pretty much most of the end of last week and most of this week where we've had these indecision bars. Okay, so as I've been pointing out, the oscillator is a bit tired. Expecting some kind of a pullback. Trend is still up, so technically we should still be looking for longs. Now the question is, are we looking for a long off the level that it's bounced, or are we expecting some of these gaps to the downside to close? Okay, we could still come back and close that gap and still be in an upward trend. Okay, so from where we are now, that's a good 1,700 points. Okay, so anyway, let's just get down to the time frames we can trade. Now you can see on the 4-hour we are still in an upward trend. We've got continuation diversions here, so basically lower lows on the oscillator but higher highs on the price. So jury is out at the moment whether this is a proper rejection bar. You know, we had a pin bar, inside bar, engulfing bar here, and another pin bar. So we had 4 bearish patterns here, but we failed to break through that area there. Okay, so what we're looking for is really a break below these fractals for a downward trend to start. So at this stage, trend is still up. Buyers are still stepping in off key levels, and this is the current key level. I think the next level. So the next level is not necessarily going to be this here, but it may well be. It shouldn't be that. It should more than likely be this area here. Okay, so I'm looking for an inside tail, and that's the inside tail. None of these fractals are an inside tail. In other words, I don't have a bar that goes past one of these fractals. Whereas here, I have price going past the fractals up, coming back and not testing that area. So that to me is a key level, and the next key level is pretty much at the gap close here, which is that level there. Okay, and then again you have another key one and another gap close, which is down there. Okay, and pretty sure that you're going to get one at this gap close. Yep, there's a couple here as well. Okay, so anyway, we can't focus on these ones that are far away, especially not when the trend is up. So what we're looking for is longs, but we're looking for them from better positions. So moving on to the hour, nothing really we've got in the hour. Is a little bit of a warning here. Big move down, could be a bit of a consolidation move up. It's not very clean, so normally I'd like to see sort of one green move up, one red down, one green up onto a level, and then a move down. So we may, we haven't tagged that level, so this level here, which is a breakout level, which is an inside bar on the hour, is definitely something that I would expect to be tagged. And once that's tagged, depending on price action, then looking for the next short. Okay, so let's just get down to the half hour and talk about the closing range strategy. As I pointed out yesterday, we were at a fairly significant level. Okay, and when your closing range is at a significant level like that, 9 times out of 10 you get a fake out on the first breakout. Okay, and that's exactly what happened here. Now, one of the things that I do also like to look at is that first half hour of trading. The volumes are very thin and the markets aren't really open. So it's essentially a South African futures market for half an hour before the market opens and half an hour after the market closes. So there's a lot of price manipulation that can happen in there because of the volumes that are going through. Because it's really just the futures contract that's driving it, and we're not a major player. So it can take just one person with a decent amount of money in their trading account to drive price in a direction for a quick buck. Okay, so that's often why when you see breakouts in that first half hour, take it with a pinch of salt, wait for the market to open, and then take a trade, especially if you're at a major level. So to highlight what I'm just saying, you can see our opening bar was a break of the closing range. See that? And then immediately it came down. Now this pattern here, because it's at the open in that first half hour, is definitely something that I ignored, and I typically do ignore. What I'm looking for is that 9 o'clock bar. Okay, and here is the 9 o'clock bar here. 1, 2, 3, 4, 5, 6. Yeah. So there's our first half hour of trading. And you can see this first 2 5-minute candles, that's an indication that this thing's pulling back. Okay, so fake out, then 9 o'clock bar rejected it properly. And that would have been your entry. There's my entry. And to that point, we got the range target, which was pretty much there. We broke through the range target and we sort of hit the 261.8 level as well. Okay, so both targets were hit before we sort of going sideways. Okay, so I mean that was pretty much that rejection off the top there would have been the entry, which is there. Fairly large stop loss, 250 points, but you were looking for a good 300-point trade. Okay, so and I think in the 12-minute, all of them you can see is proper rejection bar in that first 15 minutes of trading. And then price still came back up to test it and then dropped below. Okay, anyway, what are we looking at for today? Pretty much more of the same. The range is fairly small today, so there it is there. So what we're looking for is be careful of a breakout to the upside. I still think you're going to get a rejection off 52,653, I think it is. 52,650, yeah. Just take 52,650. I still expect we're going to get a rejection off there. This does look, if you look on the half hour, one move up, one move down, second move up. Okay, and no diversions on it at the moment. But I would be watching those. I'd be watching this closing range breakout again. So if we do break the upside, just watch out for this. It's very close. So you could see a bit of a move up and then a move down. But I don't think it's going to happen today. I think we are going to just continue down. 10 cents is down almost 1%. USA was flat yesterday. And the Rand dollar 13.98, ever so slightly stronger. So personally, I think we are going to get a deeper pullback here. And kind of looking for the 200 moving average on the half hour. And let's just see if we have, and pretty much the bottom of this range, which is what it boils down to. Okay, so that's kind of my view at the moment. That's what I'm looking for. And get back to this level. So, delete the noise. Yeah, so I think for me, it is really closing range strategy, am a little bit cautious of any breakout to the upside because there is a level there. Okay, so we do get a move to the upside. I think that's going to cap it, and then it's going to be a move to the downside, and the range target is pretty much there. Okay, which lines up in this area, this zone of rejection here. If that gives way, then obviously, well, if this bottom fractal gives way here, so this level gives way here, which is 52,320, then I would expect this measured move to actually play out. Okay, anyway guys, that's it for me today. Looking for shorts and watching this closing range strategy. Going to be skeptical of any longs unless we get a break up there, a retest of the range, or the 50% of the range, which is pretty much slap bang on these tails here. So if we get a breakout, a retest here, and we hold above the alligator, and price action indicates we're starting to move up, then I will take that long with a very tight stop loss. But this area, I do suspect it's going to be fairly significant considering how long it took us to get through it. Okay, anyway guys, that's it for me today. I hope it helps, and I'll catch you later. Cheers for now.